So we have 23 participants and we have 33 signed up. So more may arrive, but we're going to get started because we have 2 hours to get through a lot of content. To start off with, my name is Perry and Perry King. I am the training officer in the sponsored programs office here at UC Davis. And I've been with this office for 1.5 years now and really enjoying this role and look forward to today's class. Elisa, you want to introduce yourself?
Sure. I'm Elisa Bunn. I'm one of the team leads for the proposals team here in Sponsored Programs.
Thank you, Elisa. So I see in the chat, Shalene's asking if it's okay to join without signing up. Yeah, I just wanted folks to sign up so that I knew who was here today, so I had a record and I could follow up afterwards. I'm going to be sending out the slide deck to all the participants. So Shalene, I'll add you to make sure you get a copy of it. So that said, yeah, all the content that you'll be seeing in our slide deck, you'll be receiving a copy of it. So you don't have to take as extensive notes, and there will be some links. And so you'll have access to those links as well. Additionally, we are going to have you break out into breakout rooms at some point today. Because we're a large group and because we have limited time. Okay, I see that JS Torres wants to be added as well. We're not going to take a moment now to have all of you introduce yourselves, but when we do go out in the breakout rooms, I think it would just be nice if you said hi, if folks said hi to each other, and also that you unmute yourself, show your video if you're able to do either of those, and just try to make it feel like you're meeting some folks, and then you're going to work together to address some questions that we've asked you to address. And likewise, as we're going on today, Elisa and I, we both welcome your questions. And this is a training opportunity, so there are no questions that are too dumb or simple for you to ask. Ask us anything as we go. If we're going too fast, let us know, and you can write in the chat to address us, or you can unmute yourself, show your video, and ask the question that way. We welcome the opportunity to make sure you know everything and are getting taking full advantage of this class. All right, with that said, let's jump right in. So today we're going to be looking at the budget templates that the Sponsored Programs Office has made available for you. These were actually created by Elisa, so she is the Grand Master and all-knowing. So you can ask any of your questions and go straight to the source here. So you'll know how to figure out which template you should use and how best to use it. We're going to talk about how you identify and enter direct costs into the template, and then how you can modify the template to more accurately calculate the costs. And then we'll talk about indirect costs and how to use them in the template. So the way we're going to go through all that content is, first we're going to do a quick overview of the templates. We're going to look at some of the formulas, and then we're going to focus on direct costs, then indirect costs. And at the very end, I have some resources if we have time to go over those. But as I said, they will be provided to you with the slide deck, so you'll have all the resources. Now, before we get started, just so we're all clear, we're all on the same page. I know there's some folks who are new to campus. I don't want to confuse people right out of the gate, so we're just going to talk about some of the terms we will be covering today. So direct costs are costs that are clearly associated with the project that the PI is seeking funding for. So they're associated with them and they're necessary for that project. So it's very clear if they're going to be working with, you know, they need a certain microscope and it's for that project only, that is a direct cost for that project. But indirect costs are added on to funding proposals, and these are not readily assigned to the project, but these costs go to UC Davis to help support research in general or instruction. And so there's a list there on the page: general office supplies, the internet, power, the buildings. So when we talk about indirect costs, these are separate from the project but attached to it. So indirect costs are also called F&A costs, or facilities and administration costs. So we will be using those terms interchangeably. And the way the indirect costs are determined is first, well, I'm going to the bottom, the F&A cost base. That's the amount of direct costs that we will be using to determine the indirect costs. So there are some things in a budget that don't have indirect costs applied to them. And so you have to figure out what is the base. And then once you figure that out, the indirect cost rate is the percentage of that base that we're going to use to determine the indirect costs. And at UC Davis, we commonly use the NICRA, the federally negotiated rates, the indirect cost rate agreement that's negotiated with the feds. So that right now is 59.5, and next year it's going to be 60, and there's a split rate, and we'll get into what split rates are. So that the NICRA federally negotiated indirect cost rates, these are based on modified total direct costs. So the base that is used to determine the indirect costs, it includes these things up here that can be part of a project, of a proposal budget, but it excludes certain things. So sometimes a sponsor will request just all the direct costs will be included when determining indirect costs. So we don't always use the modified total direct costs. And then in some cases, they'll include total costs. So there'll be indirects on indirects. But that's rare. So the budget templates are found at this on this web page, and I'm going to include that in the chat for you right now so that you can access it, because we will be using this for today's training. So where do I go here? All right, so if everybody can please access that link, and once you're in there, I'll show you where to go. So you're going to be jumping back and forth between our presentation and the budget template. So a quick way, if you don't know, is you can Alt-Tab. You hold down the Alt button and you click Tab, and you'll jump back and forth between the last two screens you were working on. And as we proceed, it could be helpful for you to have just a pen and paper ready to jot things down, because we're going to have some information that we share with you, and then you'll be using that in subsequent slides. So a pen and paper would be handy for you to use. Change the screen here. Okay, Are there any questions at this point? All right, so what are the benefits of the budget templates? So the great thing about them is that they have current rates and fees. So you plug in the costs for the project, and the templates will automatically help you determine the F&A rates, the fringe benefits, the benefits for the personnel that you've put in there, and single IRB fees. And if the project period spans 2 fiscal years, then the fiscal years run from July 1st to June of the following year, then the budget templates automatically help you calculate the split rates. These are things that if you're doing on your own can be very time consuming and confusing. And additionally, there's a tab that has data that helps you find the information, so you can just plug it into the sponsor forms when you're completing the proposal for submission. And you can also customize this. The template is very customizable, so you can escalate like personnel income over years. You can adjust the F&A rates, the bases, the appointment periods. So it's a very great tool to use, and it can help save you a lot of time, but it can be complicated when you first see it. So we're hoping this class will help make this tool more effective for you. So you may have, you've seen this screen. This is a screenshot of the budget templates. So we'll just explain what is on that screenshot. So template A and template C are single or multi-budget projects. So the template A single budget is the most commonly used one, and all of the other templates are based off of this single budget template. And proposals with multi-budget templates
Oh, there you
could be like
Are you on here?
NIHP and U grants.
Okay. So she has the early binder. Early's gonna pay for the Chem CBC, so he's
So if you have proposals with cost sharing of specific line items, and cost sharing is when the university either like a department or a school or college are contributing funds in any way, then you may want to use this budget, this cost sharing budget. So it adds up both the the funds you're requesting from the sponsor, and then the cost shared expenses as well. And then we have some templates that are specific for certain sponsors. The California State Model Agreement, AB 20. We have CIRM, which is the California stem cell proposals, and then the USDA, we have a specific template for them. So lastly, for some custom budgets, you could use the simplified template. It has fewer formulas and dynamic options. So that's what's available for you. As I said, template A is the most commonly used one. And then the last section I want to point out is the FAQs, which are buried in here. But this is a good resource for you. There's a lot of questions that you can get answers to as you're working in, and you're just wondering like, wait, what does this do? You can always check out the FAQs. And then if you don't find the answer there, you can always feel free to write proposals@ucdavis.edu, and they will be happy to address your question. So here we have a challenge for you. Just figure out which budget of these three from the template would you use to for this request here from a PI. And you can just type A, B, or C in the chat, or you can just unmute yourself and let me know which one you think, A, B, or C. Okay, we got some A's and we got some C's. All right, good. Thank you for these responses. So, as I mentioned, the C is multi-budget. So a multi-budget could be if there is a proposal for a new center or institute, and within that center or institute, there are going to be different PIs all doing different projects based around the same theme. And so they have multiple budgets that are being presented to the sponsor. And so this says that there is a subaward to UC Irvine, but there are no other separate project budgets or cost sharing. So no cost sharing, this one is out, and no other separate project budgets. Template C is out. A subaward is not considered a separate budget. The subaward is attached to the budget. And if you're not clear on what a subaward is, a prime sponsor will provide money to UC Davis for research, and then UC Davis will partner with another academic institution to do collaborative research or engagement on the same project. And that institution has input in the project. They have a PI. That PI could publish based on that research. They are fully integrated into that research project, but they're just doing the research at another institution. So it's all one project, even though they have their own separate subaward, funding budget. But so the answer for this one is A. And I hope that's clear why it's A. So now I want you to switch back to the budget templates, and I want you to open up the template A, because that's the one we're going to be using today going forward. So take a moment to open up that one, and you'll see it's just a big spreadsheet. You can scroll down and take a look at the whole thing, and we're going to be walking you through that empty budget spreadsheet, and we will be populating it as we proceed. So let me know if you're having issues going back and forth between the two, our presentation and that spreadsheet, or if you have any questions. And thank you all for providing your answers in the chat. I'm going to proceed. So the first thing we're going to ask you to do is to populate the header at the top of the spreadsheet. So I want you to take the information that's here, and I want you to enter the items that are indicated here. So the start and end dates, whether it's NIH or non-NIH, the proposal title, the PI's name, and the due date of the proposal. And once you finish that, please type done in the chat so I know I can proceed. Thank you, Mitchell. Speedy, you must have done this before. Great, thank you. We got 3. Good, so I see that there's some folks who have likely done this before, and then we have some folks who this might be a new thing for them, and it's all good. And ask any questions as we proceed. Okay, we got a good number done. Just gonna give another 25 seconds and then I'll show you how it should look. Okay, so this is how your header should look. So we know the start date because it's indicated here, and the end date is 3 years out. So the end date would be January 31st, 2026. It's, oh, this is wrong. Oops. This should say NIH. Yeah, that's a mistake. Wow, I don't know how I did that. I was working really hard on not making mistakes. But yeah, this should say NIH. And we have the title, the PI, and the due date. So hopefully yours look like that. And if it doesn't, hopefully you understand how it should have looked. And we are going to move on down through this spreadsheet. And as we go, you may want to save the spreadsheet just in case, maybe save it on your desktop. Because this is going to be our document for the remainder of this class, our primary document.
Yes, Perry. Perry, I was going to add too, you don't have to put your entire title there, like the whole formal title if you want to. You know, it can say Joe's NIH proposal 11.5 or anything that helps you, you know, recognize which spreadsheet this is. So I just wanted to put that out there. Don't feel like you have to put the whole formal title there. I also wanted to note that the proposal due date is important to update. That's the one in orange on the right, because if that's not updated and you're using fiscal years, you're going to add us extra escalation. So we've seen a lot of budget templates coming in with a 4/1 due date, and it's not 4/1/22. So it's adding us extra escalation. So really important to get that information correct.
Thank you, Lisa.
Mhm.
All right, so at the bottom of the budget template worksheets, we have 3 tabs. So the first one is the one we are currently in, the request tab. But I want to share with you what the other 2 are because they have helpful information. So the second one, the F&A details, if we have a split rate, this will show you what the period is, what the base type is, the percentage that has been applied to it. So this is the current federally negotiated rates. And it's 59.5% of modified total direct costs. And then in the next calendar year, it's going to become 60%. And so this helpful tab shows you how much of the base is applied to each, how much of indirect costs come from each, what if there's any primate center rates, these have a separate rate. It'll show you all that information here, and then you have the figures totaled up here. So this can help you when you're trying to figure out, like on the spreadsheet, like how do they come up with this figure? You can just look here and see what the breakdown is. And then starting in the last year of this project, it's no longer split rate because the federally negotiated rates are they stop at 61%. So if your budget was within a fiscal period, you wouldn't have split rates. It would just show like this. And then the last tab, the personnel reference tab, this is where you can go if there's information you need to add into your proposal and you're not sure like how it should look. And so here it shows how the appointments looks in person months for the various personnel. I've hidden the names here. because this is from an actual proposal, but you can just go across and you can see for each year of the project what the person months are, which is another way that some funders, some sponsors want you to enter the information. And you can look at the salary plus fringe or just the base salary. And yeah, so there's just a lot of good data here for you. So going back to the budget request worksheet, I just wanted to show you real quick what the difference is when you add NIH at the top. So let me pull up. So when you add NIH up here and you click on it, something changes down below. So line 184 here, it reads total subaward indirect costs. And the reason this appears when you click on NIH is because NIH does not include indirect costs into the prime direct costs that they are calculating. So they're pulled out, therefore you can ask more direct costs from NIH. And so by clicking NIH at the very top of the form, you can then enter in this is just for subawardees. So the subaward indirect costs are excluded from what you can request from NIH. So you would put in what the subaward costs, and you would indicate whether it's a non-UC or a UC campus. So we're saying, in this example, we would have a subaward with Penn State University, say, and you would show the direct costs here, but then underneath you would select the indirect costs of the above, and you would enter that in a separate line. And this is an option for you for NIH. And then it would show here separate what the direct costs are and then what the indirect costs are. And then when you go to the bottom, it would show that the indirect costs had been excluded from the total that you request for subawardee costs. And so you can get more direct costs for the subawardee. But if you up here click non-NIH, then those lines disappear. So that's why that is helpful for you. Just wanted to show you that little tool. So to use the OR budget templates effectively, the sponsor programs office recommends go to the link that I provided and download the latest version, because when any rates update across campus, we update these budget templates. So you'll have the latest fringe benefit rates and the latest negotiated rates. And so if you're using an old template that you saved on your hard drive or on your network, it may have old rates, and so you're using the wrong figures. So use the current version. And then the best way to use these templates is to use it as designed. So don't delete lines, just hide them instead, because there may be calculations within lines that you delete that will throw things off. And if you're copying and pasting within the document, copy and paste the values in plain text only. Don't copy and paste the formulas. It'll confuse things. And then some of the formulas may have red flags if you did accidentally copy something, or you may have deleted a formula that's within a field. And so look for those. And then if there are errors, you may have fields that aren't auto-calculating and throw your figures off. So with this said, I'm going to switch it over to Elisa now, and she's going to walk us through creating formulas. So for this section, we have a page of common budget formulas that are helpful. So I'm going to put this in the chat. This is just a tool for you. We won't be referencing it too much. But let me stop sharing my screen here. And let me put that in the chat for you.
Okay, so I'm gonna share my screen now. There we go. So we're gonna talk about creating formulas because this is really important when you're trying to, accomplish all your budgeting needs. And so we have and Perry, you said you put this in the chat already?
I just did.
Okay, great. Sorry, it's hard to see the chat sometimes when you're presenting. So this is really helpful, has a lot of different formulas. If you ever need any help with your formulas, or you want to know how do I budget a certain way, you can always send me an email, or if you don't understand some of the formulas on the sheet, go ahead and reach out and I'll explain them. All right. Okay, so let's talk about a real world example here. So formulas are built into our OR budget template for salary, effort, and other costs. But you might sometimes want to use formulas within those cells in order to accomplish what you want to. So let's look at a real example here. And you may want to use a piece of paper to write down, some of this information because we're going to use it in a minute. So we'll get to that in a moment. But here's our example. So Professor Apple, right, he's going to be the PI, and he's given you some information about what he wants for his budget. And he's going to commit 20% effort during all 3 project years. Professor Apple will also work 1 month during the summer, so on summer salary in addition to working in the academic year. We know Professor Apple's base salary is $131,000. They have a 9-month academic appointment and can work up to 3 summer months, right? So 9 over 12 faculty member. And then you want to escalate salaries 3% each year. Okay, so what we want to ask is, first thing we want to ask ourselves, what type of appointment and number of appointment months does Professor Apple have? So we have 3 types of faculty members, right, on campus: 11 over 12, 9 over 12, and 12 over 12. So which one is Professor Apple? That's a great place to start. And you can go ahead and call it out or put it in the chat or just write it down. I don't know if you can see Perry, if anyone's put that in the chat.
Sorry, I was unmuted. Yeah, we have a whole bunch of 9 over 12s in the chat.
Okay.
Looks like 9.5 weeks, that old movie.
All right, great. So you're right, 9 over 12 right there. All right, how much is Professor Apple's current base salary? Everybody see that? Got 131.
Yep, we got a few 130, a whole bunch coming in now.
Okay, great. So 131, there's that response. How much effort will Professor Apple commit in academic months? So that's usually the first thing we think about.
We got some 20% coming in.
Mhm.
And these questions are kind of basic, but we just want you to get used to, a PI will give you information and you have to pull the information out of that. We want to get you in that mindset.
Mhm. And then effort in the summer months, right? That's the next question we ask our 9 over 12 faculty in most points, and you have that information up there. But he gets 1 month, right, during the first year. So not all years, just perhaps has summer months done something else and just in the first year. Okay, and should we escalate salaries? And we have that information here too, right? Each fiscal year. So our fiscal year, in case some people don't know, runs from July 1 through 6/30. So in this case, we want to escalate every July 1st. Okay. Here we go. All right. So we're going to talk about salary escalations. There's 2 types of choices. And the default is fiscal year. And sometimes people have a lot of questions about the fiscal year escalations. versus project year. So you actually have a choice, and it's important to understand the difference. Depending on the submission due date and the project period, fiscal year escalations builds in pre-escalations. So there's a lot of choices as far as percentage, right? You can escalate everybody on the entire grant by choosing 1% in this box, and it'll apply to all salaries, or you can click multi and then you can do it by person, it'll show up. But fiscal year means starting at this date right here, that you turn it in every July 1 through the project period, it'll escalate. So if our project period starts on 2/1, the first escalation will be July 1, 2023. So partway into the first year, there's going to be an escalation. If you chose PY here, you would have no escalations in year 1, and you would just apply escalation starting year 2, like 3%, 3% in the subsequent. So it's 5 project year, and it would just be a straight escalation effort time-based salary for year 1. Does anyone have questions on that, on your options here for escalation? Most people choose fiscal year because we get raises generally on July
1. And one thing I want to add is sometimes there will be an escalation for the very first year. And so you'll be confused. Wait, I entered this as the salary, and why is it different for the first year? It's because based on when the project starts, if the project starts after July 1st, but you're requesting funding earlier in the year, that escalation was already applied. So that's why the figure might be different.
Correct. Like in this particular scenario, you would have, let's say your faculty member had $100,000 salary and you put 10% effort. You would normally expect to see $10,000, right? However, in this scenario, we would only have February through June at 100,000, and then starting July 1 all the way through 131, it would be a 3% increase, for example. And if this date was incorrect, the 11/10/22, and it said 6/1/22, then we'd actually have 2 escalations. It would escalate once on 7/1/22 and then escalate again on 7/1/23. So you actually have double escalations in year 1. So these dates are really important, and deciding whether you want to have these fiscal year escalations every 7/1 versus project year, which starts in year 2, is also really important. And that page that Perry showed you, that personal reference that had a list of base salaries, it actually tells you what salaries you're using, including these escalations. So you can go to that page to see what your actual year 1 base salary is.
I have a question about escalations. I'm just wondering why they're there if they get cut off, like when we submit them. Because I was just told that one of them I have to take away my escalations because the NIH will most likely cut them.
Yeah, so you're right. NIH it has been the last maybe 5 years or so cutting all escalations to both salary and benefits. But that's really unique to NIH. For instance, a lot of times DOE and NASA will tell you to remove some escalations to fringe benefits, but they allow you to rebudget. Other funders allow you to put in escalations. For example, NSF allows you to put in escalations. So that's really unique to NIH. It also somewhat varies. So NIAID, NCI always cut them, especially for center grants. If you're using a modular budget, it doesn't hurt to include them because NIH doesn't see that there's escalations in your, in your modular estimates. So if you have a smaller budget or the budget's unlimited for NIH, like if you have no budget limit, and so you're just putting what your actual cost, and it doesn't really hurt to include them because if they get cut, it's not a big deal. However, if you have a direct cost limit and it's a center, it really, if you put them in, it really lowers your award amount.
If we do have to take away the escalation rates, can I was just wondering if people do this or if this is like allowed. Is it possible to calculate like how much it would cost with the 3% escalation rate and then just put the salary cost of that as like the consistent rate, like just calculate how much it equals overall and then just put it as one rate for the salary?
So sometimes people have 2 budgets. right? One internal budget that's more of their accurate estimate with the escalation for NIH, and then their budget that they send to NIH. NIH really expects those base salaries to be actual salaries, so I can't recommend that you inflate those salaries and average across all 5 years. What we tell people is think about placing that funding in another category of cost that would benefit the project, but you know that you may have to rebudget for actual increases. So that means like perhaps you could really help the budget by having like additional samples or additional supplies. I'm just giving you an example. However, you know that maybe there are some ways that, although not ideal, you could cut the budget if you needed to pay for salary increases. So that's one. Some people say, well, I could use an extra SRA at 50% on this project. However, I know that if I needed to put that person down to 20%, there's certain ways that I could accomplish that. So maybe it makes sense to say, ideally, this person's at 50%, but knowing that's where I might be able to. So you're not supposed to pad your budget, but there are ways, I think, when you're budgeting to know, here's an ideal budget or here's a cost that will benefit this project. They're not padding, they can be used, but at the same time, maybe I could get by without them by doing something else.
Oh, okay. Yeah, I think I'm just gonna create 2 budgets and then go with that. And so that way it won't complicate our submission. Yeah. Okay. Thank you so much.
Yeah, the way NIH has it designed is really unfortunate because if you include them and they cut them, you still have to pay them. You just have less money to pay them, right?
Yeah.
So it's an unfortunate policy because we're supposed to use our best estimate of cost.
Yeah.
Okay.
Okay. Thank you.
All right. So our base salary, right, everybody has written down was 131, as we noted earlier. So at the Med Center, this doesn't apply, but in this particular case, Professor Apple is on campus and a 9/12 faculty. It's really good to know how to calculate summer salary. So first of all, it's important to note that we annualize somebody at UC Davis. So when we say somebody has 10% effort, in general, it means their annual effort over 12 months. So we want to figure out how to annualize. The first thing we want to do is annualize Professor Apple's salary. Okay, so this is how we're going to do it. First, we want to enter 2 lines because Dr. Apple is having salary in the academic year or effort in the academic year charging, right? That's 20%, and then 1 month of summer salary. So we want to have 2 lines because we have 2 different benefit rates. There's a benefit rate for summer and a benefit rate for academic year. So in both cases, we're going to enter both base salary and total possible summer salary. So if this is a 9/12 faculty member, we can put a formula right into the summer salary and say equals this. This cell is E8 in this example. And then we're going to divide it by 9, right? Because this is 9 months, base salary is 9 months, and then multiply it by 3 to get 3 summer months. So it ends up with, here's base salary, and here's summer salary, and total annualized salary is going to show up in this totals column right here. So what we sometimes see on these sheets is somebody will just put summer salary here, 43,000 is 3 months, and then they'll just put, 50% of summer for 1.5 months. Really, this should be, if we want the effort to equal actual effort from the effort reporting system, we want to annualize salary. Okay. Does anyone have questions on that? Do you see any questions, Perry?
Nope.
Okay. All right. So you end up with your spreadsheet looking like this. And we know that our top line's academic, and then our second one's going to be our summer month, right? You can do that in any order. Okay. So then we know that in general, Professor Apple wants to have 20% academic effort and 1 summer month. Now, because this is 12 months worth of salary, it's actually 12 nights of salary, right? Here's 9 months and here's 3. So this is equal to 12, 9, 12 basically academic or summer months. Then we put 112 in here because we're annualizing salary. It's the same amount of money as if we just put 131 and then put 1/9 here, comes out to the same amount of salary. But since this is 12 nights, 1/12 is going to equal 1/9 of base salary. But then our effort is going to be correct. 8.33. So 8.33 is always annualized effort for 1 month of effort on a grant, regardless of whether somebody is paid 9/12 or 12/12. So if they were at the Med Center or Vet Med, their base salary would be their 12-month salary. You wouldn't have summer salary. And you put 1 month and it would be 8.33. If it's on campus, you'd have your base and your summer and you put 1/12, and that's the same amount of money as 1/9, but this is actual effort. So what we sometimes see is people put 131 and they put 1/9, right amount of funding, but then this comes out to 11.11%, and they put that as the total effort on the project, but that's actually overstating effort because effort is always based on 12 months. Does anyone have questions on that? I know it's a little bit complicated, so sometimes it takes a couple of times to understand it. Okay, so the next thing we want to do is label our salary basis and type so we can know what our effort months, our person months are. So this was our academic year, right, that we were having 20% effort in, and this was our summer months, and this person's paid 9/12. So this is a drop down, and you can just choose. This doesn't change your calculations of salary. It does change sometimes your person months on the personal reference page. However, it's important to note so you know what type of salary that you're charging. Right, so you know which benefits to use, you know what the intention is. So this is a good reference to go ahead and update that. And there's other on here that'll say 12/12 as you saw, and there's some that say 11/12 for your CAES professors. Okay.
So as we go along, you can enter all this information in the spreadsheet and see the calculations for yourself, so you have more of you're understanding more fully what's going on in your spreadsheet.
And please jump in.
We have a question that just came in
Okay.
from Gregory. Why are you paying the PI 20% of the total salary? Shouldn't it be the base salary only?
In this particular case, the way it was worded is the PI wanted 20, in our scenario, the PI is asking for 20% effort. It doesn't necessarily say 20% for 9 months. If your PI said 20% for the academic year, then we would say equals 20% times 9/12, right? So our effort would be a bit lower. I think it was just the way that this particular scenario is. 20% annual effort is 20% of this total. So that's the most possible amount that could be charged for 20% effort. Now, if your PI only worked 1 summer month, the amount charged to the grant would be lower than this. But the way that costing and policy wants us to budget is what's the max possible amount of effort they could work would be all 12 out of 12 months. So 20% effort is actually equal to an entire 20% out of 12 months.
Well, that's a great question, Gregory, because this is informative for me.
Yes. So if your PI said I want to work 20% for the 9 months, then it's actually, we would enter fewer effort here. So if I look here, it's be 15%. So there'd be 15% annual effort if it was just 15% during the 9 months and then 1 summer month. Does that make sense?
I have a question. So if it was 20% effort for just the 9 months, could you just remove the summer section calculation of the 43,000 and then leave the 20% there?
You could get the right amount, but it wouldn't be 20% effort. So when you went to your effort reporting system, if you put 20% in, then you're actually cost sharing some of your effort.
Gotcha. So would you explain how you got your 15% then?
Sure, definitely.
Thank you.
So basically you can put a formula in. I just did it really quick on my calculator. Can you see this? 9/12 of the year, right? So 9 divided by 12 is your percentage of the year that the PI is working, 75%, right? And then if you times that by 20, it comes out to 15%. So that's one way to do it. However, if you're just entering it in this particular field, let me pull up a sheet for you. The way I do it is, let's say, here's our 131 and our summer salary. Can do equals 0.2, right? That's how we do 20%, 0.2 times 9 out of 12 months. So basically you're working 20% for 9, and then it's out of 12 months. And then it comes to your 15%. So if you notice, that's 26,659. Now, if I take this out and I put 20% in here, it comes out to the same amount of dollar amount, but then I'm telling the sponsor I'm committing 20% effort when you're actually not. You're only committing 15% because we annualize effort. If you said I'm committing 20% during the academic year, then that's accurate. But you would just have to know that this 20% is not effort. So like when you were in SP and you were writing how much effort the PI was devoting, you wouldn't want to put 20% because then you're overstating.
Gregory had a follow-up question in the chat. He wrote, so Dr. Apple will work more than the 8.33% in summer months?
No, in the summer he's working 8.33. He's working 1/9, which is 11% of a 9-month salary, but it's 8% of an annualized salary.
So
wait,
I think
you're talking about plus this. This is just annualized effort. So this is 20% effort. So basically total effort for this PI is 28.33. We don't consider, in our effort reporting, we look at our pie as a year. So we don't consider people, when somebody takes summer salary, they don't actually have to work on a grant during the summer. That's why we annualize it, because it just means out of your entire year, you know, our effort reporting is around November, right? Out of your entire year, out of your pie, how much % did you work on this project? And it doesn't matter when you took that time. So that's one of the advantages to accounting for effort in that. So this just basically means 28.33 out of your overall pie for the year. And the reason we do it this way, summer versus this, it just helps us calculate salary and how to pay them and payroll, right? Salary is an additional appointment, a researcher appointment. Therefore, we want to distinguish it. It has a different benefit rate. But as far as what goes in the effort reporting system, it's the sum of all of this over a year. So he might work in December and still take summer salary.
So Elisa, I know we're spending a lot of time on this, but I find it very interesting. So my understanding is that the way it looks in the budget now, we're actually paying salary for the summer months in both line items. But that's okay.
Oops. Sorry, I went too far.
Because the 20% on the top line includes the summer months, and the 8.33 on the second line also includes summer months.
It does, but we're not actually paying summer months in the top in that respect. We're just paying out of annualized salary, 20%. It doesn't matter when you take
it. And policy, this is allowable in policy the way it is right now.
Correct.
Okay,
that's why we annualize it. So the important note is all of this is for internal purposes. We want to annualize salary and say out of an annualized pie. That means out of a 12-month. I always think of it as a pie because we think of pie charts and fractions, right? That's the amount of time you can expend in total on your research, and 20% is going to be plus 8%. So 28.33 is going to be expended on this project. So if it was 20% of 9 months, then of course this would be 15 plus 8, but you're thinking about it out of a whole year, how much time am I expending on it? Therefore, that's why we say, what is the most possible somebody could get paid in a year when we're calculating how much effort is worth.
Thank you for walking us through that. Oh, another question. Ooh, we've got some questions coming in. So we have a question that says, I don't usually enter a given PI on 2 lines in a budget. Would you include both lines on an actual budget?
I would if you had a mix of summer and academic. If you don't, then you don't need to. But the reason we do this is because it's two different benefit rates. So down in the benefits section, we're going to choose summer benefits for one and academic year benefits for the other one.
Yeah. Over at the Med Center, a lot of our researchers are on a 12-year, so they don't
Mhm.
have a separate summer salary. So that one line would be fine for someone on
Right.
a 12-12.
The only other time we use two lines is like if somebody is going to change roles, like maybe they're assistant project scientist and they're going to, or they're a postdoc, but they're going to be assistant project scientist by year 3. You have two different benefit rates. You might want to use two lines for that person. It's really to enable the benefits.
And Gregory added, he was the one asking the questions. He said, you are assuming the 20% is 12 out of 12. In our experience, we split the two, academic and summer.
Yes, this is academic year effort. It's just the way that the PI worded it. He wants to expend annual effort at 20%, which is 15% of academic year. So we just put 20% because of the way that the scenario is worded. But even if it was academic, you still put total annualized.
Okay, let's keep going because we have a lot of ground to cover.
Okay. All right. So this is what we should, if you enter that information, these are the totals that should be in your budget. Is this what everybody has? Anybody have anything different? No?
Shalene wrote yes. I'm not sure if you're saying this is how it looks for you, Shalene, or if you have something different. She added yes again.
Okay. All right. Move on to the next. All right. So we're gonna go to breakout rooms, right, Carrie?
Yep. Okay. So let me assign breakout rooms and you explain what they're going to do if you can while I break out the rooms.
Okay. So we're gonna break out for about 5 minutes. And you can determine a reporter in there, and that one reporter can share their screen, or other reporters may share, if desired, and complete the salary and effort for the rest of the personnel. So here's the scenario here, so you can work together. When you're finished, you can, of course, leave the breakout rooms if you're finished before the 5 minutes. And then we'll discuss it when you're back in the room.
Okay, and Max, yeah, you go into a breakout room, that's fine. So we're gonna have 5 people in each breakout room and introduce yourselves and then work through entering this information in your budgets.
Perry, would you like me to join the room?
You can.
I think I just got a notice, that's all. Just stay up. Perry, we might have to have a subclass just on effort.
I'm sorry?
I said we might have to have a separate class just on effort.
Yeah. So one of our rooms has only 2 people in it. And that's one you can join if you want.
It said it would stop sharing my presentation though. It might be.
Oh, okay. All right, so what is the breakout rooms? Hello, everybody. I understand that some of you can't see the screen in your breakout rooms. So I am going to put all the information in the chat. Sorry about that. Yeah, Lisa, it's interesting when I organized the chat, it seemed like they had more people in the class and oh, because some people had to leave at 10. So suddenly we had less people in the chat room.
Okay.
Hello, Perry here interrupting. I'm going to give folks another minute. If you finish the assignments, you can just exit the chat room and return to the main room.
Yeah, we didn't get the information.
How'd it go for you guys?
We didn't get the information.
Oh, I sent it in the chat.
Yeah, I think the chats are specific to the meeting room.
No way.
Way, yeah.
Oh, well, that
Guys,
was a complete fiasco.
I was gonna take a screenshot of it and share it with our group.
Okay, well, good to know for the future.
Right?
Yeah. So sorry about that.
It's okay.
Okay, shall we just go forward with entering it together then? Everybody ready, Terry? Everybody's back?
It's like a hard adjustment.
Yeah, for
after
sure.
being home with the baby for so long.
Yeah.
And just being able to like feed her on.
Okay,
Just give me a moment here.
okay.
It's gonna be one more minute before all the breakout rooms automatically close. I can't just close them.
Okay, sounds good.
Well, I was trying to do something a little different. It didn't quite work out as I hoped.
Curious, regarding the postdoc. Is it 50% of the 39,990?
Let's clear my screen so I can see that.
Yes,
Okay, I would have to assume so, but
So it's 50% of half a year.
right.
So it's 50% of 50%. So it'd
Which
be a
is-
quarter of the 39.99.
Okay.
Shoot.
Hello, everybody. Um,
Hello.
that didn't work out as I had hoped. Obviously, I'm not a skilled breakout room person. So I understand you couldn't see the scenario. And then when I put it in the chat, you also couldn't see the chat, a lot of you. So that didn't work out as I hoped. So therefore, we are just all going to go together through all of this information. And I apologize for any confusion, but I hope you guys were able to have a nice chat. All
okay,
right, Elisa.
all right, so let's look at how we enter all the various salaries. Okay, we already went, here we go. Okay, so our project scientist, right, had a salary of $50,000. And this one's pretty straightforward when we get to the staff that are paid 12/12, right? So we can put 20% in each effort period. So for the postdoc, we were just talking about this is 50% for 6 months. So some people I know like to use 2 lines and say, you know, put part of the salary in here. I've seen that kind of also with GSRs. You can actually put this on 1 line and use different formulas. So here's one option. You can say, you know, 6 months at 50% divided by 12. You can also do 1/12 times 6, which is the same as 6/12 times 0.5. There's a variety of different formulas, but basically, I usually use 0.5 times 6/12. That works as well. You can actually sometimes combine formulas here. If you have a GSR that's working 50% in the academic year and 100% in the summer, you could say 9 times 50% plus 3 months and divide that by 12. So you can put it all right here in the effort. So our GSR here is working 3 months at 25%. So this is the same concept. 3/12 times 25%. And you'll come out with the appropriate effort. Does anyone have questions on those formulas?
So it is equals. Oh,
So if you had somebody that was working 3 months at 50% and 4 months at 100%, you know, then you can do, you know, 3 times whatever the percentage plus 4 times the new percentage and divide the whole thing by 12. Put it in parentheses. And divide by 12. That's our basis. And then for these, they're all calendar months. So we want to update and make sure the salary basis remains calendar 12/12. Right? Does anyone have questions on those? Nope. And so we can see what this comes out to be once we add in those formulas. Did everybody get that? You may still be working on it if you didn't have a chance to do it in the breakout room, but with the percentage that comes up to. Okay. And so that gave us these totals for salary. All right. And salary usually takes the longest to enter and think about it and effort. So once you get this part seems really long, but you know, the rest of it is breezier. Okay. Let's move on. We're going to talk about entering other direct costs. All right. So here are all our other costs, right? We have equipment, travel, participant supports, materials and supplies, publication. These are all follow the general federal categories of costs that you find in the 424. So talk about entering those. So in the personnel, we talked a lot about salary and wages. Then there's the fringe benefits, right? There's drop downs, so you can have fringe benefits. So let's talk about that next fringe benefit section. Okay, so here's our fringe benefits published by Costing and Policy. And these are general fiscal year 22-23. This means, you know, it ends 6/30/23. And then subsequent years, we add a 3% escalation to that in most cases. And these are by just employee type. So you start to learn which ones are applicable. Some of them are easy to just look at the summary chart and say postdocs, but others, like, it's good to know that SRAs, lab technicians are all other staff, junior specialists are in this other academic appointment. So you start to learn that by title code. Costing and Policy also has a sheet that lists all title codes and tells you which one is accurate. Okay. So to make this easier, as you notice, we said for certain fiscal years, we had a particular rate that was approved, and then we had that 3% escalation. So again, this uses a split rate, a certain number of months at one rate, and then a certain amount at the next rate in the next fiscal year, depending on when your project is. So you can see, based on the start date that you enter in the spreadsheet, it tells you what the split is. So 5 months at one rate, 7 at the next in this particular project period. And we see everybody, this automatically populates from the people that you enter in up above in the salary. And then our next step is to choose the appropriate benefit rates. So if you want to take a couple moments to see if you can pick out the appropriate benefit rates for the individuals we have on here. And then I'll show you the totals. If you have any questions as you're choosing them from the drop down, please just put it in the chat or go ahead and shout it out. Okay. All right, so I'm going to go ahead and show you. This is academic year campus, so this is the appropriate faculty rate. We used to call this rate C, but Costing and Policy doesn't use the letters anymore. There's a faculty summer. There's a little note up here if you hover in the spreadsheet that tells you there's a summer A, B, and C depending on when you think your faculty member will take summer. If you don't know, picking summer A will give you a pretty good approximation. The difference is just slight. You know, whether they're going to take it before the next fiscal year or completely in there. So that changes it just a little bit. Admin, a project scientist. Project scientist actually is in the academic rate. We have all of their staff here. Sometimes this is for an admin. So you would want to determine what their actual title code is before picking this. So if you have faculty and academic, that's appropriate here. Postdoc, of course, is the postdoc rate, and then grads and undergrads are at this rate. So you would see if you took salary and divided it by 12, multiplied by 5, multiplied by this rate, and then plus salary divided by 12 times 7 times this rate, you would get the amount requested for fringe benefits. Does anyone have questions on that? No? Okay. So here are the resulting amounts. And you know, our faculty summer was only in year one, so you'll see it going. Really trying to another good thing to know about is this escalations to fringe. So it's set at yes, so that's escalating by that 3% that we talked about. There's a couple more options. If you look at the drop down that's in here, there's also an option that says NICRA, and that means the rates that are on our federally negotiated rate agreement. So if you just want to use what's on our rate agreement, some sponsors, let's say like the National Labs, Lawrence Livermore, they want you to use exactly what's on your rate agreement. You can pick NICRA here, and it'll just use the rates that are already approved, no escalations. If you're applying to NIH, maybe you want some pre-escalations, like where will we be in year one projected? You can pick period one only here, and then it'll include this initial escalation and then leave it static the rest of the years. So those are your choices in this dropdown. So it's good to know you have those options depending on your sponsor. Okay. And then there's a CBR add-on that applies not to federal, but just to like some foundations you can choose to add it. It's not a very big difference, but some people want to add that CBR. Okay.
So I have a question. What does NICRA stand for? Is it the National Indirect Cost Rate Agreement?
Negotiated indirect
Negotiated
cost agreement.
Indirect Cost Rate Agreement.
Okay. Let's go to the next slide.
Alyssa, I had a question.
Sure.
So under the include CBR add-on,
Mhm.
period one and period two, it looks like, well, are those, I have the first two lines that have carried over, and then where it begins with 5376. Is that something you calculated, or was that supposed to be carried over as well?
I'm trying to see which one you are looking at right here.
Yeah.
So this currently doesn't have the CBR add-on. Is that what you mean? Or this is period one. So this is the third one down. This is the all other staff rate.
Okay.
5376.
Yeah, I mean, I did all those drop downs for those first few columns, but they didn't. I wasn't sure if they were supposed to carry over or if those were calculated later on.
Are you saying the
tell me a
bottom?
little- Sorry, go ahead.
The bottom section is just on the right. Is that what you're asking? What's on the bottom of the screen now is just should
Yeah.
automatically calculate on the right of your spreadsheet. Yes, it should.
Okay. It didn't do that for me
Just for that.
for persons 3 through 5, I guess I'm saying. Yeah.
I think I got something similar going on where it calculated the first period exactly what you have there, Alyssa, in your spreadsheet, but period two, it calculated on the second line 1,503, and also on the 1, 2, 3, third line, it calculated 5,705. So it's calculating a number there where you have zeros. It's putting in a calculation there for period 2 and 3.
So this is calculating off of the information you put for salary up above. So if you didn't complete the salary section, then
Okay.
these budget lines won't auto-populate. And if you put in something different from what we were showing on screen earlier in the salary section, then your figures will differ here.
Okay.
Thought I had it the same, but I must have something different then.
Yeah, me too.
Okay. Let's see. Harry, do you want me to open a spreadsheet and we can look at it?
Yeah, if you can open up the key that's populated and have them just compare.
Yeah.
I could also share my screen, but then that would not yet.
Just 1 second. Okay. So,
Yeah, mine was mine's a data entry.
so yeah, you would want to make sure this is what your effort looks like and your salary totals. And then these should come out here. Does that help?
Yes.
Thank you for the questions, Peter and Max. And yeah, this is helpful just to go through step by step. So thank you for asking.
Okay. Let's look at the to the next one. Okay, so now we've got all the personnel costs entered. It's time to think about, are there any equipment or capitalized software? So equipment, this is a category we often see things in here that actually aren't equipment. So they have to be items that are at least 5,000 more per item, non-expendable, so not something that gets used up, standalone, so it shouldn't be like connected to the building, and should have a normal useful life of 1 year. And if you have any questions, EQ Help at ucdavis.edu, they'll really help you determine if something's equipment before you even submit your proposal.
What's that email, Elisa?
EQ Help at ucdavis.edu. That's the equipment helpline. Usually Rocky answers or one of her staff, and very helpful. Sometimes PIs want to buy like components like servers and equipment and things, and we don't know, are they going to count this monitor as part of this system, or is it a separate supply? So it's good to reach out to them.
Yeah, good. Thanks.
Software can be capitalized as an asset, but it can't be a license or a service. Like somebody, you know, if you're paying Microsoft for a license and it's $8,000, it's not capitalized. It has to be some kind of software that we purchase and we own the software. So not a license, not like Amazon services, cloud software, any of that, or your normal site software. This is something maybe we're going to purchase and then modify. Renovations or facility improvements. This will be like if you're adding an air conditioning or something that's not movable, so you're fastening it to the wall. Those are actually renovations, and they have to be 35,000 or more. So that's important to know. And so none of these things are subject to indirect costs. That's why it's really important to get it right, because if you think something is equipment and put it there and it turns out to be supplies, you end up with less funding for your budget when it's charged post-award. Okay. So Professor Apple is going to purchase software in year 2 to help analyze the study results. And the software cost, this is licensed, but it's not going to be a license. It's actually, the software costs $7,000 and expires 3 years from the purchase date. This would actually be a supply cost, Perry. Didn't notice that. So we're gonna modify this a little bit. We're gonna say this is software that we're purchasing for $7,000, and we're gonna make modifications to it. It's not a license. So then that's gonna go to the equipment line. Okay. We'll fix that. So this is like we bought some software that we're gonna customize to use for patient records. It's not a license. We own it. It's going to become our asset, and then we can capitalize it. So software is not equipment. We put it in the equipment category because it's really equipment and capital assets. It's a capital asset, and only when we own the equipment, it's not a license. It's just because this section is exempt from indirect costs that we use it for capital assets and equipment. So you could type equipment and capital assets if you wanted to be clear. Gregory, to answer your question. So again, not for licenses, but when we actually own the software. Okay. So a quick refresher on subawards, because this comes up a lot and it's important to know about how to budget for subawards. You know, a subaward is when we partner with somebody else to do part of the scope of work. So here's our scope of work and we're going to do part of it and we're going to send money somewhere else to do another part of it. So this is not when somebody's doing a service for us. You know, most of the time this is another university. But it's good to know that a subaward has to be intellectually significant and separable. So they have to be running the show. They have to be decision making. You know, it's not that they're just running samples through a machine and sending us back. That's a service agreement. So there has to be some type of intellectual contribution. And you usually have a PI at your subrecipient and they're involved in the decision making. So these are some things to know. And we have actually have a chart on our website that has a table that kind of tells you the difference. Most of the time we know when something's a subaward, but once in a while, maybe we're working with PG&E and they're doing some work for us and we're not quite sure whether it's a vendor agreement or service agreement or you know, a subaward. So a good thing to know is that we receive all the funding, we send it out. We're going to flow down the terms and conditions of the award. With a service agreement, we don't flow down terms and conditions. Sometimes if we're working with for-profits, the PI wants to make them a subaward when they're just doing a service for us. And it's problematic because if we flow down the terms and conditions, the government owns the IP that are developed. And if somebody's doing a service as part of their business, like Boeing's creating something for us, they're not going to want the government to be able to own their intellectual property. So it's important to really categorize that right, not just think about the indirect costs that are associated. Okay. Does anybody have questions on that? So we can help you with this if you reach out to us early too, if you have a scope of work. So when we have determined it is a subaward, somebody has a PI, it's usually another university, we're sending funding. We're going to put it in the subaward category. And so in this scenario, we have NIH at the top, right? So NIH doesn't count our subaward indirect costs toward our direct cost limit, even though they are our direct costs, they don't count them toward the limit. So we want to separate them out so that we know whether we're right at our limit or we have money to expend. So in this scenario, in year 1, 2, and 3, you see Irvine, right, as asking for 20,000 total costs. So 10,000 direct and 10,000 indirect. So pretty good for UC Irvine to have 100% indirect costs right there. Stanford has 35,000 in total costs in year 2, 20 direct and 15 indirect. So we are going to look at how to enter these. Now, this indirect cost that we're adding to that section is not UC Davis's indirect. All that's calculated at the bottom. So this is just our subawards indirect. That's an important distinction. I know some people have thought that maybe IC above means to put our indirect on the first 25, but it doesn't. So this is just direct cost. Okay. So just because we're moving along, I'm going to go ahead and display this for you. So UC Irvine is the type of subaward is a UC subaward. So we're going to put their direct costs here. And then right below it, we're going to put UC Irvine again. Some people put dash direct cost, dash indirect, but you can also tell from here, IC of above is the indirect cost of the above. That means the calculations for indirect are going to treat both of these lines as one subaward. And then all UCs are excluded. So all of this will be excluded from our indirect. This is a non-UC. So it's going to just charge on the first 25K of the combination of these two. And then you can see the total indirect cost. It's going to sum both of these here and sum this here. So we know that these dollar amounts here will not count toward our NIH limit, right? So we're going to have more money that we can put into direct costs, even though this is actually, all of this is direct costs. Does that make sense to everyone? Okay.
I wanted to ask about the subawards that are like split between multiple tabs / cores. Like, because this example puts them all in just one tab, and
Single budget.
what if, yeah, if they're like, is there's like a multi-site, project budget, but the people that are involved in the like the people that have sub-awards are involved in multiple projects.
Yeah.
So we're trying to simplify them by putting them all in one section and then just justifying it to say that they will contribute to other areas as well.
So for H, a multi-component grant, they treat each project or core as like its individual RO1. So all the effort should be self-contained in that project or core. So that means if you have a sub-award that's participating, let's say in the admin core and project 2, their effort needs to be split on both of those. You don't charge indirect costs on both of them necessarily. There's another choice here that's called excluded. So let's say you have University of Texas and they're going to be on project 1 and project 3. You can design that as one sub-award if it's the same PI, especially. If it's 2 different departments at University of Texas and 2 different PIs, you're going to want 2 sub-awards. But if it's one PI, you can have one sub-award with 2 budgets. Like here's my admin core budget and here's my project 2 budget. In that case, you can choose from this dropdown excluded on the second one. So you're only charging indirect on the first 25K for one. But you definitely want to put them on the, have those projects be self-contained. They actually go to different reviewers. And so you want the cost to be like for project 2 to be all the costs of project 2, all the effort for project 2. So you want to divide your sub-awards up that way.
So the sub-award people will have to create multiple justifications if they haven't already.
Correct.
Okay.
Yes.
That makes sense that it's reviewed by different people. That helps me understand
Yes.
why. So thanks.
Okay, so there is an excluded there. In some cases, another reason to use excluded and not UC or non-UC, sometimes we have foundations that say you can't charge on the sub-award and then you can choose excluded from that list. But in this case, you can see why we split them up and we have this. Okay. Perry, are we going to breakout rooms again, or do you want to just go through?
No, let's not do the breakout room. Let's just all work on this one together.
Okay. So we're going to talk about GSR tuition and fees and single IRB fees. There's some options at GSR tuition and fees that are good to know because you have a variety of options and this can get a little bit complicated at times. So in this particular scenario, we're going to budget GSR tuition and fees for a non-resident GSR 3 in the personnel section, right, is up there, but we're going to want to now add tuition and fees. And we're going to use the buy down. So what the buy down is the provost has decided that to not penalize faculty, like we want to go ahead and fund a lot of grad students. So the provost will pay 25% on extramural funding of all tuition and fees. And then in addition to that, actually, we'll pay non-resident tuition starting in year 2 for any PSR. So that's the usual buy down. In this particular case, we're going to work with the non-resident tuition. So the starting rate is $33,644. And then this particular GSR is only working 1 quarter during each of 3 years. And then we also know that we need an IRB. NIH says you only have 1 IRB for an entire project. So if you have sub-awards, we're going to include single IRB fees so that we can all get together and have a joint IRB for the project. Okay, so let's look at how to enter that information into our spreadsheet. I'll give you a minute to see if you want to try to enter it, and if not, we'll go ahead and go through it. Okay. Let's take a look. Okay, so in this particular case, we've added GSR 3. This is just a reference field, so you can put anything in here. It might be people's names. You can unhide more lines or hide more lines, but in general, people have a to be named person. This non-resident and resident is a drop down here. This is just for your reference. It's not going to change the rate. So if you're using a line that was originally resident, you're going to have to update the rate yourself. This rate is a free field. That means you can put in whatever rate is you want to use here. There are some rates already in there for our current rates, but sometimes, you know, the campus updates them and they're a little bit off. So go ahead and put in the full rate of whichever one you want to use. Use the buy down means that 25% is going to apply. So it's going to, the starting is going to end up at 75% of this plus any escalation that you choose. So if you notice that you have one GSR and the quarter is, you know, the amount is lower, then it's because that buy down is being used. So you can use full rates, but there's no reason to because all extramural funding gets that 25% buy down. You can choose to escalate right here, just to let you know, there's a drop down here, project year and AY. So if you pick AY again, starting at that due date every October 1st, you're going to escalate by whatever rate you choose here. So it's similar to the fiscal year salary escalations. There's also a choice of PY here. If you don't want to escalate year one because you already know what you want to charge, then you want to start escalating year 2, 3, 4. You can switch that here. You can also switch your escalation rate. 10% is actually kind of large. A lot of people leave it as the default, but you can do 3%, 5%, whatever you 0, whatever you think is fast. There's a drop down right here. This is number of GSRs. In some cases, our GSR is only employed on one particular project, and you have to charge full fees, even though it's not, you know, their full effort. But let's say you only wanted to charge a quarter, you could either put equals, you know, 1/3 in here, or you can, there's a drop down here for quarters. You can change this from number of GSRs to number of quarters and budget accordingly here. But sometimes full GSR tuition and fees is required even when our GSRs are only at 25%. But you can, those are all different options you can use, you know, to budget for your GSRs as needed. And then again, IRB fees are when we have human subjects and we have subawards, or we are a subaward. And you can, you know, put what your site name is. Do we have an agreement with this organization already for this project? Are we having continuing review? Are they UC or not? These are all drop downs you can choose, and it'll let you know how much the amount is. And then you can say how many sites you have. And it gives you the ability to go ahead and change those as needed. Whoops, sorry about that. And so in this particular case, we're budgeting for the entire amount of the non-resident, and you'll see it lowered by that 25%. You can also see the split here. We're using academic year escalations here. We didn't choose PY, we choose AY. So 5 months we're at one rate and 4 months we're at an increase, because after 5 months of academic year time, there were 4 months left over for in the next academic year. So there was already a 10% escalation for part of the year. And that's, again, that split rate. You can see what it is right here. And again, if you don't want that split rate and you just want like to start your 10% in year 2, then you would change this AY to PY. So if anyone has some questions. Does NIH also prohibit escalations to tuition and fees? They don't in one sense. Because we already apply this 25% discount, we're usually not exceeding our rates. So they don't cut them because their concern is actual rates. They want to pay projections. So they're not really projections. So I haven't seen them cut in that sense. NIH does have a GSR compensation limit, which means, and I believe it's around $54,700 right now. It's the 0 level postdoc salary. So if you add 100% of your GSR salary plus fringe plus tuition and fees, it can't exceed the 0 level postdoc. And so it's really important in your NIH justifications to say like 50% of this GSR is at 50% time, but that's 100% effort. So they use that 50% of salary as 100% of salary when they do that calculation. But usually can't afford to have a non-resident tuition NIH grant because it exceeds that 0 level postdoc. So they don't cut the escalations, but they do cut the GSR compensation. So if you have questions on that, you can reach out to me and I can explain further.
Another question in the chat, Elisa.
Okay, if a GSR will work for 3 months, right, 1 quarter during each of the 3 years, will available tuition equal 3? No, it's not gonna change based on how much they're working up there, because there's no correlation between these numbers and percentage, right? That would be two, because you could put somebody's name up there. What this is based on the project period, there's 9 months available. So somebody might have a 6-month project period. Let's say you're doing an SBIR and you only have 6 months and 3 of them are in the summer. Then this would only have a 3 here because there's only 3 months available, right, within the project period. For the most part, if you have a 12-month period, it's going to be 9 months are available, and you need to adjust here. Either change this to quarters and put 1 quarter, or change this to a percentage instead of a 1. You can put partial in here. Okay. All right. So lease costs. If most of the work will be conducted in a leased building, and the lease costs are going to be charged to the award. In this particular case, so you would put these in your other direct costs, and you put your lease, and then you're going to choose not subject to IDC. So those all go in the other expenses line. Okay. Does anyone have questions on that? Okay, so we're going to look at what that looks like. There's a subject to IDC, so you can put a no there. Lease costs are one of the few items in other direct costs that are not subject to indirect. So that's a drop down right there too. All right. Once in a while, a sponsor will have a very specific guideline that says, you know, something's not subject to indirect costs, like a foundation. You can put that right in here as well and use this field to go ahead and update that. Okay, so now I'm going to stop sharing and bring it over to Perry.
All right. Thank you so much. And let me just share here. Where are my controls? Give me a second to work. Okay, I found it. Okay, so now we've gone through direct costs. Now we're gonna, in the last 15 minutes, we're gonna look at the indirect cost section. So at the bottom of the spreadsheet for the indirect cost section, there is a drop down on rate type where you can select any of these drop downs here. So if it's research, or if it's another sponsored activity, if it's on campus or off campus, or if it's instruction. We also have other. So you can use other. If you click on other, you can customize and select the base, customize base, or and enter the F&A rate. So these lines right here don't normally appear until you select other. And then here you can change the base type and you can change the rate. So for the activity we've been working on, would you, in the dropdown, would you use the on or the off campus rate for the indirect costs? You can put your answer in the chat, or you can just say it. The one we just did, we've been talking about, would it be on or off campus? We have on. We have lots of ons. The correct answer is off campus. And why is it off campus? We have a lease. Yes, exactly. Most of the research is being done at a leased space that is off campus. So on and off campus can be confusing. If you're in plant sciences, say field work is not off campus. It's still being administered, managed from campus, and a lot of time the harvest or the samples are returned and they're viewed on campus. A lot of the work is based on campus, even though sometimes they have to go off campus to do a portion of it. Most of the time, field work is on campus. But if they're in a leased building, or if everything is being done at another location entirely, so they're in the field and then they're all going to another building that's not on campus, so then that could qualify for off campus. And if you have questions about that, whether it should be on or off, you can write proposal at ucdavis.edu and we can help you make that determination. So because it's off-campus research, this is how it would look when you input the information. Are there any questions about that? So we've covered all the ground that we were hoping to cover in this class. We looked at the budget templates, talked about direct costs, and modifying the templates and indirect costs. Are there any last questions before I just touch on the resources that I'm going to make available to you? All right, so I'm going to put in chat a course evaluation link, and this is helpful for us because we had a lot of interest in this class, and we'll be offering it again. I'm going to correct the few errors, like in equipment. It won't say a license, or yeah, the software is licensed. And I'm going to iron out the kinks in the breakout rooms. But yeah, we appreciate any feedback to help make this course better. And so also we have our contact info. Always feel free to reach out to either me or Lisa, and we always like to serve our campus and help make your job easier and go smoothly. So some of the resources, we have a number of tools that are related to preparing budgets that may be handy for you. And there's all these different ways that you can contact us if you have questions. We have office hours now. You can drop in on the first and third Thursday of each month between 10 and 11. And a few of the analysts and team leaders in the sponsor programs office are available to answer your questions. And we have this workshop that you're in, and the next one is going to be in January, and that will be on using NIH Assist, the electronic research administration system, when you're submitting single component applications to them. So there's a link at the bottom of all the upcoming training opportunities, other classes that are available. If you're not aware, we have a monthly research administration forum, but we just had the last one for the year. We don't hold them in November and December, but it's good to join in. Usually about 150 people or so join in to hear updates that affect research at UC Davis from a variety of campus units. And we have this listserv, the contracts and grants listserv, is used to share important information that affects people who are preparing proposals and accepting awards at UC Davis. And it's also how we send out reminders about the forums. So it's a good listserv to join, and you can just click on the link when you get the slide deck to join that. And this other one is about any updates to Cayuse. And at some point, we're expecting a major update to Cayuse. And so then we'll be using this listserv to communicate that information to campus. And as I mentioned, we have other classes you could take. List of acronyms, and that is it. So thank you very much. And I hope this was beneficial for you. And I thank you so much for your time. And I will be hanging out if anyone has any last questions.
Yes, and I just wanted to also say, just reach out anytime via email, give us a call. We're on Teams. Anytime you have a question.
Thanks, guys.
Yes, thank you.
Thanks a lot.
You're welcome.
Elisa, I just sent you an email doing Madison. I was wondering if you possibly have time to talk about
Can we see that list of acronyms real quick again?
Yep.
Perfect. I'm just going to screenshot.
I'll be sending you the slide deck too, so you'll have it.
Oh, true. Okay, awesome. Thank you so much. This
You're
was very
welcome.
helpful. Thanks.
All right, well, thank you. Great work, Elisa. I learned a lot in this class. And yes, I'll be making those updates to the slide deck. If there's anything else, I'll be changing the license language in the equipment section. Yeah, if there's anything else you think I should change, just let me know. All right,
All right.
thank
Thanks,
you.
Barry.
Bye. Max.
Yeah, is there any way I can get a copy of the recording? I just want to do, it's for research for the upgrade.
Yeah, I'll send you a copy.
Okay, awesome. Thank you.